burning billions for beanbags was just the beginning. WeWork's meteoric rise and subsequent catastrophic implosion shook the tech world to its core. Adam Neumann, a charismatic co-founder, envisioned a global community, not just shared office space, aiming for an impact beyond mere real estate. This ambitious dream propelled the company to an astounding peak valuation of $47 billion in 2019, a number many considered wildly inflated by venture capitalists, eager for the next unicorn. SoftBank, a major investor, poured in billions of dollars through its vision fund, betting heavily on Neumann's grand vision, perhaps overlooking significant financial red flags and a business model resembling traditional real estate, more than innovative technology. The company expanded rapidly, opening 742 locations across 121 cities, accumulating 600,000 members seeking flexible offices. Despite this vast network, WeWork reported annual losses per member in the thousands, a staggering $2,189, reflecting a business model that prioritized growth at all costs over sustainable profit. Neumann himself controversially extracted $700 million in loans and sales before the company's public market debut, a move that raised serious governance questions. The culture internally resembled a cult with lavish events and an unwavering belief in Adam's transformative power, often blurring lines between personal and corporate finances. Neumann famously purchased buildings, then leased them back to WeWork for personal profit, further complicating its financial structure. When the initial public offering was planned for 2019, investors scrutinized the financials, revealing immense operational losses and unsustainable spending patterns. The prospectus exposed long-term rent commitments totaling $47 billion, a colossal burden tied to leases signed for up to 15 years. Adam's personal use of company assets, his private jet travels, and his erratic leadership style further raised alarms among potential public shareholders. The proposed IPO valuation plummeted to below $8 billion, a staggering 90% reduction from its peak in a matter of months. This dramatic re-evaluation triggered widespread panic, a massive round of layoffs affecting thousands of employees globally, and a severe blow to SoftBank's investment portfolio. Adam Neumann eventually departed with a staggering $1.6 billion exit package, leaving a trail of financial devastation. The company's fall served as a harsh lesson on unchecked ambition, the perils of prioritizing perceived value over tangible earnings, and the fundamental difference between a tech company and a real estate landlord. It exposed the stark reality that even with visionary leadership and massive capital, fundamental business principles cannot be ignored for long. The dream of reinventing the workspace transformed into a cautionary tale of corporate excess and the dangers of a cult of personality within business. This implosion reverberated throughout the startup ecosystem, causing investors to reevaluate their risk appetites for unprofitable growth stories. A 90% valuation drop within months truly stunned everyone.
This isn't a single monolithic network, but a sophisticated tapestry of interconnected national systems, each maintaining sovereignty while contributing to a robust collective operational picture.
$47 billion simply vanished into thin air. WeWork, once hailed as a revolutionary force in office spaces, spiraled into an unprecedented financial maelstrom. The company's internal crisis intensified dramatically after Adam Neumann's departure, with his stunning $1.6 billion exit package. SoftBank, the primary investor, faced a staggering loss of billions of dollars on its nearly $18 billion investment through its vision fund, marking it as one of the biggest venture capital failures in history. Tens of thousands of employees globally experienced mass layoffs, impacting lives across 121 cities and 742 locations. Entire departments were dissolved, leaving a trail of human cost and uncertainty for countless families. The grand vision of a global community provider dissolved into a complex struggle for survival. New management inherited a company burdened with immense long-term rent commitments, some stretching for up to 20 years into the future, totaling over $47 billion. They embarked on an aggressive campaign to renegotiate or exit hundreds of unprofitable leases across its vast portfolio. Many landlords were left with empty buildings and significantly reduced rental income, impacting their own financial stability. WeWork's occupancy rates plummeted, especially as the 2020 global pandemic exacerbated the shift towards remote work. This added another layer of complexity to its already fragile business model, making its short-term subleasing strategy completely untenable. The valuation of the company continued to shrink rapidly from its peak of $47 billion in 2019 to a mere $5 billion a year later. Smaller investors witnessed their capital completely evaporate, seeing a total loss of their stakes. The company eventually went public via a special purpose acquisition company, or SPAC, in 2021 at a vastly reduced $9 billion valuation, a desperate attempt to secure much-needed capital. However, even this new public listing could not stabilize its persistent financial woes. Its stock price continued to decline, reflecting deep investor skepticism regarding its path to profitability. The ambitious plan to revolutionize office culture transformed into a cautionary tale of corporate mismanagement and unchecked entrepreneurial ego. The global real estate market felt the reverberations of WeWork's overexpansion, leading to reassessments of flexible office space models. This colossal implosion forced a critical reevaluation within the entire startup ecosystem, prompting investors to scrutinize unit economics and sustainable growth strategies much more rigorously. It starkly revealed that even with access to massive capital and a charismatic founder, fundamental business principles cannot be ignored for long, leading to severe consequences for all involved parties across multiple continents for many years to come.